converting assets, for example, from an IRA to a Roth IRA will allow those assets, if done properly, to grow from here on tax-free and allow you to access money out of those tax-free and to pass them on to your beneficiaries tax-free. That's the goal. Hi, folks. I'm Colin Richards, president and founder of Roth Richards, and I'm excited to be with you once again on this episode of the Roth Richards Show. And today we're talking about how you can start building a tax-free retirement. That may seem impossible to you because it seems like in our tax environment, taxes are waiting for you everywhere. Sales tax, real estate taxes, income taxes, on and on it goes. Well, the truth is that if you get started planning early, you can develop a plan to pay no taxes in retirement. And I'm excited to present this opportunity to you today. First of all, let me ask you this question, and I ask this in all my public workshops. Are tax rates high right now? As I speak, are tax rates high? And before you answer, I want to give you a little bit of a story, a little history of tax rates. And I'm going to use an old favorite, Ronald Reagan. Now, whether you liked him or didn't as a president, or whether you liked him or didn't as an actor, his first career was in acting. And Ronald Reagan, post-war, used to make 2 films per year, making around $100,000 each. You say, great, sounds good. Well, here's the interesting bit, is that he was typically done about halfway through the year and then didn't work anymore. You say, well, it's nice for his lifestyle as an actor. Well, that wasn't why he did it. The reason he did it was because every dollar he made over the first $100,000, $200,000 from those 2 films was taxed at 90%. 90%. Can you believe those kinds of rates even existed? Let me ask you this question. Today, we've just experienced the Tax Cuts and Jobs Act within the last few years that was passed, lowering rates to some of the lowest we've seen historically in a generation. So where do you think tax rates have to go from here? Well, if you just said up, I agree with you. I believe that we're going to experience higher rates than we are now. And as I talked about in my previous segment on avoiding paying too much taxes in retirement, I think a lot of you are going to be in the crosshairs of the IRS if you have tax-deferred accounts. And so we've got to start taking advantage of this window of opportunity that was created with these low tax rates and these high standard deductions that we have right now, because I believe they're going away. So let's get going while the getting is good. So first of all, I want you to take advantage of the current low rates to move your money intelligently from forever taxed accounts to never again taxed accounts. You say, well, what do you mean, Colin? Well, if you have an IRA, a 401k, a 403b, a 457, a tax-deferred investment, you invested in that on the assumption that one day when you retire, your tax rates will be lower. Well, as I've already discussed, that's unlikely. You'll probably be spending as much or more during these more discretionary years. And so here's what I want you to do, is intelligently, I want you to consider working in a strategy to slowly move money from forever to never tax, from IRAs that are tax deferred, 401ks that are tax deferred, to vehicles that will never be taxed again. Here's the catch. You've got to pay the taxes now, right? So we're going to have short-term pain and long-term gain. This is one where the long-term results are going to outweigh the short-term pain. So what do you mean? Well, converting assets, for example, from an IRA to a Roth IRA will allow those assets, if done properly, to grow from here on tax-free and allow you to access money out of those tax-free and to pass them on to your beneficiaries tax-free. That's the goal, is to get the IRS disinherited from your accounts. Now, one of the problems with this strategy is that paying taxes now, you might be in a high bracket already because of the income you're earning. So that means you may have a limited amount of opportunities so long as your income from other sources is high. So what we want to do is intelligently, using software, using what we at Lord & Richards call a financial independence roadmap, we want to develop a plan, a sophisticated plan to take money out at favorable rates, not unfavorable rates. So the Roth is one way to do it. Now, some of you could actually still contribute to a Roth IRA or a Roth 401k. Now, a lot of people run into limitations because of their income. So one way to get around that is what we call the backdoor Roth IRA. Go ahead and contribute to a traditional IRA and convert it to a Roth, or contribute to a traditional 401k and convert to Roth. So you can still do this. You can still take advantage of these vehicles. People call them loopholes, but what I'm here to tell you is that it was written into the plan to be a benefit. And the government makes out just fine. Remember, they're getting to get your taxes on the money today. And here's the idea. We're going to pay taxes on the seed so that we can be tax-free on the harvest. Taxes on the seed so that we can be tax-free on the harvest. And then there's another tool that we should be taking advantage of. That is the tax benefits of life insurance, what some call Section 7702 plans. That's just a fancy sounding name. It just refers to the section of the IRS code that deals with the taxation of life insurance. And you know, there are a lot of rules. Complex rules, acts of Congress, TAMRA, TEFRA, DEFRA, they all are acronyms describing these laws that are written so that people don't abuse this. But here's what I've learned. Anything that the IRS or Congress tries to limit in terms of tax savings, I'm real interested in maximizing that tool. You say, well, Colin, I'm not a big fan of life insurance. You know, I've always been told it's expensive. Well, did you know that it's possible to custom design a life insurance policy to be low cost, principal protected, and to grow tax-free? Now, there are plenty of life insurance policies that have high costs, that are not principal protected, and that do not grow or allow you to access your money tax-free. The key is working with an expert, working with a team of specialists like we have here at Lord & Richards, because we've helped people, whether the goal is ultimately wealth transfer to move generations from one, or money from one generation to the next tax-free, or whether the goal is for you to access that money tax-free. This is a tremendous tool. It's an arrow that should be in your quiver, and you should consider using it. And then, of course, there are tax-free municipal bonds. But in the past, we've seen some pretty low rates, because what the government does is anytime something has a tax break built in, they just sort of bake in a poor rate to offset it. So not one of the very best choices, but I would suggest the other two, the Roth IRA, the life insurance, are great tools. So this is how you start building a tax-free retirement, but this needs to be done with expertise and care. And that's the wonderful part, is because our clients receive comprehensive planning at no cost at Lord & Richards. We don't charge for the planning services that we offer. We take care of our fees elsewhere, which we can talk to you about. And our goal is not to be exorbitant. Our goal is to be accessible to average people like you and like us, helping out moms and dads, grandmas and grandpas, coworkers and friends and neighbors. That's our goal at Lord & Richards. Well, this is a conversation I'd love to continue with you and help you build a tax-free retirement. We're talking to people just like you every single day about how to do this and how to take that anxiety out of your future so you can retire financially independent without worry. It just starts with a simple phone call.